Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How was your week?
Really good. Just a couple surprises. Kind of why we touch base during the week when the crypto small caps looked really good without Bitcoin even doing anything. So kind of struck while the iron was hot there on Wolf and CLSK. Earnings reads were really good. Just really nailed that. They've tended to be better with shares because you can get out a bit on the morning or not the, or on the after hours move. I think that's kind of a topic we can get into. But overall, the new format, the condensed list, and how I've altered my notes a bit, it's working well. So just gonna keep building on that.
Oh yeah, I like how we can not necessarily prove what we're doing, but it stands out a little bit better. And to be honest with you, your ER finds the last 2 weeks or the first 2 weeks of the switch has been great. Um, Last week wasn't great for me, but it wasn't really like the trades that I was entering last week. The
Yeah,
account was kind of being held up by those swings, right? It was looking good at the end of every week because you got 2 to 5, sometimes even 10% out of some of those swings. It's just been like that since April, May. Last week was the first week where I hit some stops. I'm completely out of square. Um,
yeah.
you just got to pick a spot, and I'm sure we'll talk about that later. On the week though, CLSK again, our system kind of just gives you always that easy one, um, and that for me
Yeah,
was
that
was it
was
last week.
uh, right. And so it's when just they kind of concentrate on a strike. With that one, it's been January 7.5 C or above, and they just keep adding to it. And I think we've learned that you don't really wait for Bitcoin. You don't wait for the whole sector to look good because the large caps were still pulling back. I think coin might finally be ready to turn around, um, but yeah, it's more complicated than just saying, oh, Bitcoin's running, so Mara is going to go up 17% today. It was like that for a while, but in this zone, could kind of go either way. Bitcoin's kind of waiting for news, but there's still a lot of room on those charts. So that's why we spend so much time, kind of filtering by market cap. I'm way more into small caps than I've been in a long time, just because of what's looking good there.
The force is strong with you, my son.
Yeah.
um, Bitcoin, Bitcoin is kind of pissing me off right now. Just sitting at a number doesn't really create the range. And
Yeah.
anything I don't short, man. If I would have shorted, I said it in voice, but Mars 17. I mean, knew that was gonna fail. Riot wasn't pretty, but there wasn't a level. Um, but the smalls, like we
Um,
got a pretty established list, and those are not only a little more resilient, but you can still trade them even on those micro Bitcoin moves. So that's why I like
yeah,
them a little
yeah,
better.
and I do. I post various setups, and I think one thing I want people to notice is coin. My line for the breakdown was 102, and when you look at when that fell, it tested it a few times and then just collapsed. And the reason it was 102 and not 110 is because when it was at 110, there was a possibility that it was going to break out and go to like 130 or 140 or something like that. And I don't know which way things are going to go. I just can tell it gets some momentum in a direction, and this is a key level. It's going to be trouble if it breaks down here,
Mm-hmm.
and that's what it did. AVGO and the semiconductors did the same thing. So yeah, I mean, if you're not going to short, there are a lot of these setups where you just really just got to wait. I mean, you cannot endlessly dip by. That's what FinTwit's telling people to do. Just acting like because something goes down 4% that it's automatically you buy it here and it's gonna head back up. Not really how we operate. TA's got to be there, flow's got to be there. Uh, Coin in particular is in a little below the middle of my biggest zone on it, which is like from 72 to 102, and then you have a level in between that. So now we're kind of back in business on that one, and it's we haven't even talked about coin in weeks, but it's like, okay, here we go, and so yeah, looking forward to what happens there.
Yeah, I think this was kind of leading to another topic, but I mean, I'm pretty adamant. I touched. I don't know if you watched Read the Room this week, but I'm kind of touching base on the old stuff since we have new people. But I'm pretty adamant with only two lines, and I know our system differs in that regard. Um, but I think we both agree that when a chart gets to a line or a level, like a specific price, you don't necessarily just hit the buy button. That's not what that line's for.
Yeah,
If it was that way, then we probably would just set buys and go hang out on the beach, right? Because
right,
our
right, yeah,
system would work. So, but
yeah,
what's very important, I think people miss that when you get into a zone or towards a level, which is the reason why I only have historical ones and I don't really try to chase the local ones, is you need to be watching. For me, time and sales are the action of the volume at minimum around that level to see how it
yeah.
reacts. That's what's more important. Not that it's there. It's that are the buyers coming in and just saying it's not going below this,
That's
and that's what
yes,
people don't really get is that. And I know it's the same for you because obviously we work together, but that's more important than a it's at the price. It's like, well, why aren't you sitting at the screen or reading your flow filters or whatever your checks and balances are? Why aren't you doing that right now on a stock that you are interested in? I mean, that's knowing the stock, right?
yeah, absolutely. So like when Twillo dips down, and I think my local pivot's like 6150. 60 is really a better level on it, but the flow wakes up. When it dips there, it's like, okay, the buyers step in. Here's 65C, sometimes 70, and then the extent to which they step in helps me decide if I think it's gonna, be a move that has some ability to sustain itself. But yeah, I mean that you want to see how it reacts at the pivot. You don't just say like, okay, I'm gonna buy it here. Consolidation under a level is sometimes a lot better than just those quick violent bounces that you get. And then for me, as far as the local pivots go, they really only work on the option side because the moves are smaller. So you get your 3-4% on coin, not really worth the risk to try to do that for shares in some full position. But a couple of weekly options or a couple of options a few weeks out, you can do well, fairly quickly. So that's why kind of our levels are different. But the best levels possible are when
They line
your
up.
levels match up to what the flow is
Flo
saying,
said, "Yeah, no,
like
100%."
a sold put right there, or strikes that match up to a level above. And this is where I disagree with people who read flow on Twitter when they say strikes aren't price targets. A lot of times they are, but they're saying that because they only do the short expiration stuff. So um, they're scalping. That's all they're doing. And I don't think that reading flow gives you much of an edge for scalping. Personally, I think there's a lot better uses of it, and I think that's what we've built on here. Getting that safe entries, sustained moves. That's kind of what we're all about. And everybody else talks about these stocks as we're getting out, and it's not really a coincidence that happened.
Well, there really isn't a one trick pony. I mean, that's just how it works. It's not like you take X, Y, and Z, and X, Y, and Z works on any stock. It's
Yeah,
as basic as I can put it. I have given up with early alert signals from the flow on laser. Just given up. When it hits my
yeah,
level, I buy it. The flow's never
right,
gonna
right,
be there. The flow is never gonna be there first. It's just not. And you
yeah,
take something like 9. The thing went to 15 when I thought 5 was overextended. Um,
right,
so you kind of learn. I mean, and you basically said, this has got a lot left, and you're like, I don't want to jump up and down voice, but I'm jumping
Yeah.
up and down voice. So like, you just kind of gotta. I mean, take notes. If you don't have a good mental Rolodex, or keep your pool small, but you gotta learn the checks and balances, the levels, and all that. Because I mean, that's the secret sauce to every stock, and that's why we stay in these same pools. I guess we
Yeah.
mentioned coin so we can stay there. That's why we talk about coin for like 2 months straight, and then you don't hear it for 2.5 months, and then it comes back all of a sudden, and it's just why, because we understand the psychology and the range, and when the opportunity is good, when the risk reward is good, and when the market conditions and world conditions are
Yeah.
good.
Yeah. Exactly.
So the back end of that, which I was trying to lead into, but it didn't work because I'm not good at that. Is the take and profit part of it. I mean, the levels and stuff also help there, in my opinion.
Yeah.
I
Definitely.
mean, take a stock, take
So
a take a stock like Wolf. Like, we ain't never heard of it. This is brand spanking new, right? Like, you're like, I found a new one. I just happened to throw a line at 369 on the chart. I mean, that's pure gold for anybody that's like, what the hell is this? I mean, you had an exit. You had 3 weeks to get out.
yeah.
But you just have an idea. You have an idea of like the true range. Mara was the same way. Like, when we confirmed that 656 on Mara, um, it gave us a new setup. But there's always like a level, a target that you should have, and that's the backside. Why is that important? Well, because you can know if there's enough, again, range, if the range and the
Yeah.
risk fit, and then you can trade it. And trying to get 100% of that range or risk is foolish, in general. Like, I didn't get 360s on Wolf. I mean, that thing ran. That thing ran
Yeah.
like it ran almost 2 days a goal on me. I took that, and I think a lot of people miss that. But I'm personally confident that, taking my 10, 25, 30%, we're gonna find another one. I mean, that's why I'm here Sunday morning, right? We're gonna find another one. So we can continue to just kind of fill our cup slowly. We don't have to just hold on and try to get the most out of every single trade. And a lot of new
Yeah.
traders have that mentality. Is like, every single trade I have to get the complete move of the trade, and you're kind of wasting time, money, and red to green happens on the option side for sure. Or green to red happens on the option side for sure. I
Oh
see
yeah.
all the
Yeah.
time.
Yeah. So here's I'm gonna describe this issue with three examples. So the first is AVGO, big expensive mega cap stock. But it responds to flow reads very well. It's a lot easier to read than NVIDIA. It's just not as noisy. We talked about last week, last 15 minutes, that 880 was a big area. If it breaks down there, it's going to drop. It closed the week at 825 or something like that. So obviously, like, hindsight, you could say, well, I could have just swung puts on this thing and just bought them on Monday, not even looked at them until Friday. But the day to day moves on it don't really work like that. It went green several times intraday, and then it would break down. So you kind of have to keep at it and keep hitting it and keep moving, in and out. You've got to stay on it. The safest trades were the puts early in the week. If you wanted to go back, you got to wait for it to kind of hit a spot and then go down. The alternative is you buy a put relatively close to the money, weeks or months out. That's going to be about $2,000. Most people in here are not going to do that. So that's why we kind of do the quick hitters. That's why I talk about it in the notes. Other example, the one someone asked me about was Wayfair, which I put in my note on Friday. One of the scenarios I talked about was this can flush it open. It had a nice pre-market move. I'm like, this can flush it open, and then I like calls next week 75C or thereabouts, and it did. So it dropped down to where it was around earnings when it had that big move up, bounced back, got about 3.5, maybe 3.75% off of lows. The options that people entered anywhere from 30 to 45%. And people were asking me, should I sell? That's not a stock you keep through the weekend, in my opinion. that's just kind of the character of the stock, because it moves pre-market. The options math doesn't really work in your favor as far as IV and all that goes. So no, I don't think you keep that. I think you go ahead and just take your money, and then we'll see how it sets up. Again, Honeywell, last example. This is kind of the opposite. Like, on Thursday, I put it in monthly swings and had an option. It's like for September 195C. Looks like it's going to turn around. Whales are in it heavy, up to 210C. But we play closer to the money. They move better, etc. Very next day, Honeywell moves 1%. Not a big move, but the options go from 180. They peaked at 270, closed at 240. You got two or three of those. I think you sell one or sell two. I think you can keep one, because the flow is there. It had bottomed out. It's not a stock that likes to just collapse on you in pre-market. So yeah, I think you keep that one. It's fine. It's got more time. So it just pushing for more profit and all that. It kind of depends on your plan going in. If we're saying for something for September or shares or whatever, you can give yourself a little more room, and learning to keep winners is a big part of things. But that's not the most common problem people have. Keeping losers too long, getting greedy, letting options go red. Those are the problems you have to fix first before you can do anything else. So I think that's where our focus is. Take profits quickly. We'll move on to the next one. I think that has to be your approach until you get to the point where you don't need to ask me when to sell. Then you can start thinking about how you want to manage it. If you're asking, you probably should be selling.
Yeah, when I first got into the day trading game, I wrote down my plan and my math equation, and that shit would not work because I was trying to get a
Yeah,
dollar move out of a stock every day. It just is. I'll just find a stock that moves $1. I'll put a bunch of money in it. It'll move $14 to $15. I'll get my $1,000. Right. That's just how I looked
yeah,
at it, and it was real hard because people would be taking money before me and all this stuff. So I flipped. I was like, all right, we got to try 10%, and even that was kind of a challenge, right? So
yeah,
having a plan that's not just hold on for dear life and see where it goes. And I trade shares. I'm not even an options trader, so I got time.
yeah,
Um, seems valuable. I think the elephant in the room, what we're not understanding and what people kind of subconsciously pick up is, I mean, because people find us from Twitter, so it's part of the conversation. But the the rest of the world that does kind of what we do, they throw away 30, 50, $100 at a time looking for a screenshot. I mean, that's what they're doing.
yeah,
They're just constantly throwing away trades trying to get to that 400 or 500%. Because we all have them. I mean, we had Carvana shares at 7 in this room. We could have got
yeah,
lucky. We could have got lucky, held on them, and had a big screen cap. But that's not a system like that really helps the account at all because you're constantly losing and then you win some back and then you constantly lose and then you win some back and there's just no longevity. But they need that screenshot because it's part of their business model where
yeah.
we find the same trades. It's just we're out of that trade and we're also out of the shitty trades earlier and we're also taking profits on the ones that they're letting go green to red. And I think that's the
Exactly. Yeah,
difference of what's not being seen and why people have this allure of 300 and oh my god, I can put 2 racks in and get 25 back. It's because they
yeah.
do that, but they burn through another 15 trades that you're not seeing. So when you go to do it, you're just going to burn through the 15 trades and you better get that one right.
Yeah, absolutely. I this SMCI one that I do want to talk about later, but I had a put overnight on it, and I was looking for calls when it does its kind of flash crash thing, but I did a put overnight. It was like $60 or something like that. Um, went to went to 300. I sold it because it was zero DTE. Ended up topping out at like 1,000. And yeah, I could have bought like five of those, but it's not a stock to do that with, in my opinion. I mean, I it was just as likely that 50 could wake up and be 20 if it ran green in one candle. So I don't like to take I don't take on that kind of risk. But you're right. There's a lot of people that they'll just play both sides of something like that and not care if they break even or go red on it because they use it for their marketing and to bring other people in. And one thing I've started doing with these accounts, look at what they were saying about these stocks in January of last year. And guys talking about Twilio going to 500 is the same guy talking about QS going to 20 right now. And or that Trade Desk, that the two times he's ever said he liked it were the exact top on the weekly chart last January, and then now. And I mean, can those come back? I mean, sure, but it's they don't have a clue what the hell they're talking about. It's based on nothing. It's all just hype and like a shell game, misdirection. They post an option list. They don't, with outrageous price triggers. They never trade any of that. And then they'll show you a SPY or SPX 1000% gain that they never even talked about. It's like, oh, I saw this and went for it. And they're not doing it. They don't have timestamps. We talk about timestamps all the time. They don't have them because their whole system is chaos. And people coming from that environment, to us, there is a learning curve, and you have to alter your perception of the market, your expectations, and completely rebuild your thinking. But if you do that, you can actually build something sustainable, consistent, and for one thing, just stop losing money, and then we can start building from there.
Yeah, I definitely see the this I guess it's the sales angle in a day trading market where momentum trading just kind of makes sense on what you're supposed to do. And you don't
Yeah,
have to, and a lot of people that get introduced to that, they just get latched on to that this guy was right. The first guy you ever learned from was right. um, Twitter's been fun for me. I don't forget a lot of things, and like you're saying, you go back to a couple of years. Well, unfortunately, I just remember most of them.
yeah,
I don't want to say no names, but I've seen people quit and then go get Series 7's license. I've seen people join every goddamn room and then start their own. Um, Probably just stealing calls, to be honest with you. But
yeah,
it's almost. I'm on Twitter for you now.
yeah.
Because I mean, there's not even like good pennies out there anymore. There's a couple discords that do good pennies, but I don't even see the value in most Twitter frurus anymore. Um, Before you could kind of, like you're saying, timestamps, you could just kind of review their plays and say, oh, okay, that was a good call. Nice, I better watch that stock. There's not a lot of that even out there for me anymore. Um,
Oh
kind of,
yeah, and even like during this pullback, the perma bear accounts that are taking a victory lap on it, it's like, well, I mean, you guys wanted to short Nvidia like 340, and so I mean, yeah, it's coming up on 400, but can't really claim that as being part of your thesis when the market ran 30% in the indices past where you said it was about to collapse. So yeah, I mean, there's a combination of those gambler lotto position accounts, and then the macro people who just like to hear themselves talk. So yeah, there isn't a lot of value on it. I get replies sometimes that are just ridiculous, where people tell me what low IV is bad. And I'm just like, here, okay, well, explain this then. And then I show them X or Honeywell, and it's like, okay, you get a 1-2% move, your options go up 60-70%. You get a 1-2% move in QuantumScape or Carvana or something, your option's red because it has to move more than that for you to do anything. So
exactly.
um, so yeah, they don't know what they're talking about.
In a nutshell, they don't know
Yeah.
what they're talking about. Um, I want to pivot to our weekly game show,
Mhm.
um,
Yeah.
just because I check it on Friday just to kind of. I check it on Friday because I don't check it during the week, unless market conditions aren't going the way I think in my head, and then I'm gonna go look at it. But So you had 453, 443, the $10 range. I had 451, 444. Basically, just a little similar boxes. We had
Yeah.
451 on the high, so I got the high, and 443 on the low. You got the low last week. I think we stay inside our box.
Yeah. Yeah.
Consolidation, summer market showing up, all that good stuff I talked about last week. Kind of hit us in the face this week, it seemed, especially on this chart.
Yeah, it did. And so we've had this before where, CPI moves it up a bit, didn't hold that. And then PPI takes it down. And then, obviously, kind of recovered from that. And I think that, the big theme there is you're not going to get a sustained reaction to data right now. Market's kind of just done with that. But it can really, it can shake some people out, especially if they're in short expiration options. It's just an environment where swinging those is a bad idea. If we're going to consolidate and go sideways, you're just going to lose money just by, stocks doing nothing. So, you want to be careful about that. But yeah, I agree. I don't think we get any real big jolt down here without some kind of world event. And then that same kind of pop and fade pattern, more so than the puke and rally, is kind of what I'm looking for um, throughout this. And I still think tech is relatively weak compared to what I'm seeing in industrials, healthcare, staples. So we have some internal market rotations, which is where the sideways comes from. That money's just moving around, not pushing all of everything up. We're kind of out of that mode.
Yeah, I think we're going to be a little on the other page. I'm just convinced in my thesis of summer market. I do agree with you with the rotation and stuff, but that coupled with low volume and just not really a lot of catalyst. ER threw me off last week. I mean, I work with you. I came in last week like, all right, let's get these obscure ones. Just figure out which reports are responding, and let's get the obscure ones. And I seen everything from bad reports to good guidance run, good reports,
Mm-hmm.
good guidance fall, mergers fall, acquisitions fall. Like it just complete misses run with good guidance. So it was very
Yeah,
hard to figure out what the market was looking for in ER reports last week for me. I think that continues. I think we're just confused for August. Also, if you've been following along on the whole show, August to April was my original thesis. I think
yeah,
we all remember that, and the people that were first on that, not us, because we're flat brain day traders, we're not ahead of the game. But the people that were really first, that got into like the good stuff, like this is when they're going to start taking profits. Like Netflix would be a good
yeah,
big name. Like that ran early, so the ones that won on that, their profit cycle is going to start. It probably started last month or month before, but it's really going to start kicking in come August, September. Without a catalyst, I don't really see a big push up until October. We get back closer to the next rate hike with a run into that, or pause or whatever they do. So I'm kind of, I don't know 430, but I think we got to tap 440. P. I really do. Maybe I'm
Oh,
not
yeah,
not
I'm with
like
you
next
there. I mean,
week,
that's still.
but we're going there. And
No, I think 440 is pretty reasonable as a to the downside. It's just the sustained moves down like 2 3 trend days in a row down. I think that's still going to be kind of rare. Um, I don't think they're going to make it that easy. And then with SPY in particular, as much energy and healthcare and industrial exposure that it has, it's not going to have as drastic a move down. So that's why SQQQ is so important. It's why we got in on that early. And if you bought when we talked about it, you can just kind of hold on to that because during some of these really bad days, that's going to move up significantly. So yeah, I'm pretty much with you there. One thing about earnings, man, and the small caps, like big wins and big losses
Big
lately.
losses. Yeah.
For like some stuff we've been on, like AMRS and that Kano Health and all
Cano.
that.
Yeah, yeah. That's the one I was
Yeah,
thinking
just
of.
uh, yeah, those those kind of activate the quote the bankruptcy trade, the thing I don't really like. But yeah, to see them fall the way they are. But then you go to the other side, that quantum computing move on Friday in INQ and RG TI, like that was just incredible. PGY, another one that we've been on. So yeah, I mean, just these pennies, the 30-50% moves um, in either direction, just based on these catalysts, pretty incredible. And I don't think that's going away anytime soon either. So definitely going to stay on some of those.
No, no. I think sector in general is where the safety-ness comes from in those. Um,
Yeah,
I mean, obviously, if you're in some bio or healthcare, that's going to have more risk than some computing chip company or some lidar company or something like that. Um,
yeah, yeah.
just the way operations work. Um, but back to SPY, I'm with you with the not 2 days down, but trend. I think trend's got to stay down. I'll go first here, 437, 451. Um, yes,
Nice.
it's sideways though. I mean, I don't care how you cut it. I mean whether it's up or a little bit down, it's just gonna be sideways. I don't know if I said it to you privately or in the group, but it was 4 to 6 weeks for me, and I'm still kind of there.
Uh, yeah, yeah. I like that. So I'm gonna go 439 and 448.
So you're tighter this week.
Yeah.
Interesting. Interesting. You gonna add anything to that, or you just want to kill it right there?
I think that the if you're looking to play puts, that QQQ is a better going to give you a better look,
Just buy some
because I
calls
think
when
that's
we
where the
when we break 440 over here.
yeah yeah
That's
yeah. So I just think yeah, tech can get a little ugly, particularly the semiconductors. So be careful with your dip buying over in that territory.
at Monday 6:37 West Coast time. If you're East Coast, it's 9:37. 6:37, 9:37. Just load calls and puts. You'll bank.
Yeah.
Sorry. Uh,
Yeah. Yeah, make sure to go out of the money, because you make more
way
that
out,
way. So
way out.
yeah,
Make it affordable.
yeah.
Make it the right amount so you can lose.
Yeah.
um, talk a little bit regular news before we get out of here. A lot of big box stores got ER, and I'm afraid oil's going up. We're just like a month late, so those are two things I'm sure we could discuss a little bit here. Big,
Yeah. The All right. So the big box stores, they're pretty tricky to if you're gonna. I hate that verb play, but if you're gonna play ER on
do you want to say
Home
invest?
Depot, and yeah,
That's fine.
try trades better. I'll just say trade.
All right.
If you're gonna try to trade ER on Home Depot, Walmart, Target, um, that's pretty tricky. Walmart and Target have had the big moves down on earnings, so there's probably a little more there. But yeah, Home Depot in particular, I think people will probably step in if it drops. So what's more important to me than what it does that day? How strong do they think the consumer is? And because these are the stores for kind of for everyday people. Um, Home Depot is going to have a lot to say about um, how some of this discretionary spending is going down, and so I'm really intrigued about what they're going to say, because I think the market is maybe looking to latch on to something negative there, and that could help push us down a bit more. Um, and if you just look at where they're going into this, Home Depot's 331. This is getting to the highs from January, February, when that stock was doing well. and it's hit some resistance up here before. So so could see a decent jolt down, or it's also a spot where it's broken out before, so could kind of go either way. But yeah, those are big, so definitely want to be watching that, not necessarily trading it, except maybe the day after for me.
Yeah, I always try to catch the news in case they say something, especially the Home Depot and Lowe's. And Walmart's a little more tricky, but if they say something, Walmart's usually a new partnership. We'll move something
Yeah,
else. But
yeah,
Home Depot, they say X, Y, or Z's up. Like we've been selling a lot in home renovation. You'll look at your window companies and stuff like that, wood manufacturers. Um, where's that Geldwin at? But those
yeah.
are the plays. Those just a little more sustained move. And then the chance of doubling down on the news, right? If Home Depot says something about a sector in the sector, then like Gelwin's a great example. If Home Depot says window sales are just going through the roof because it's flipping hot, and they help with energy cost, then you get Gelwin coming out saying, "Hey, we got a new line of energy efficient windows," and that just kind of keeps the ball rolling on something like that. So I look for that from the bigger guys, um,
Yeah.
in general. But trading them
uh,
off my radar 100%, or holding them. I'm gonna go with holding them off my radar 100%.
yeah.
Just not something I like to hold
um,
on to. Um, Oil
yeah, I
though.
mean, I think,
Sorry. Go ahead.
yeah, yeah. Real quick on Walmart. I around 145 said, like, it was a good
Yeah.
spot for it. It's 161. I think you take some profit here. I don't see the appeal of holding that through much of that through earnings. If
Yeah.
it's not the kind of all time high chart I like to trade. I'll put it that way. Um, Mine are like Elf and Monster and things like that. But yeah, yeah. So Walmart, I think you take the win going into earnings and then just see what happens.
Walmart to me
Um,
is like trying to trade
but yeah,
Ford.
oil. I think I'll just go to one of the reads that we had. I started talking about Exxon.
Yeah.
102 was my line. You had a chance to even get in under that, and my whole thing was whales are going to lose so much money if this breaks below 100 that they're just not going to let it happen. So that was the safest entry that I had on oil at the time. Oxy's been good too, off the same old pivots, but yeah, we're kind of running now, and the question is if XLE can break through some resistance here, then you start seeing Exxon go to 120 and Cop go to 120, Oxy maybe go to 70. All that's kind of in the cards. But if you're trading it, not a lot of stuff is great share side here if you aren't already in it. So I think it's a little bit more of an option look till we get a significant pullback there.
Yeah. I think you had one I liked. We'll get into that when we get over there though. But yeah,
Yeah.
totally with that thesis. For me, I'm just, why is it so late? I feel like we're maybe like a couple weeks late on oil, and
Mm-hmm.
is that just going to be like the trend into the winter? I'm still 485 on gas prices out here, so it's kind of affecting me in real life. Um, and I don't want to see it at 90, $95 a barrel again. Um,
Yeah. Yeah. The energy. I think the bigger opportunity right now is in
gas,
natural gas and
yeah,
uranium. Both of those are giving you you're a little bit closer to the bottom on some of those. Even though, I mean, with natural gas, UNG, I just kept most of it from entries near 749. I'm comfortable with that. I'm not really watching it day to day. Extremely unlikely that just collapses back down. So I think the trades you look for, some of the secondary names, the oil natural gas combos. I'll be looking at a lot of that over the next few weeks.
You still got UNG shares?
Yeah, yeah,
No, you good job. I let those go when I seen some money. Good job.
yeah.
Good job. No, I should have kept them. It's just so slow, but sometimes you need that. You need that process to get the big winner on something that you held for 2 months, and you're like, oh, well, that's a good
So
chunk
yeah,
of.
it was like a one of those. 80-20 share options deals for me, and I sold the options on the first move. I think it was like 740,
Yep.
something like that. They were 7C, so I went ahead and just sold those. Made a nice gain there. Kind of paid for most of the shares. So yeah, so just letting those go. Looking for potentially $8 to $10 before I start moving out of
Dude,
that.
and now I got to ask. I mean, you don't have to tell me where you're at exactly, but do you still have Tups?
Yeah, I did.
Okay.
I kept some Tup.
God.
I've got maybe like 1/10 of my original uh, position on that because they got earnings. So I'm like,
It's free.
let's see. It's
It's
free.
free.
So yeah, yeah. I don't
Awesome.
like Tup options up here, but I will say that 8C is actually active. So that's gonna be fun to watch.
You ready to get to work, B?
Yeah, yeah.
All right, let's do it.